Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for the evening, as we're now at March 23rd, 2023, 6:38 p.m. Central Time, a little late. We're over the 2000 level, and it's not unusual if markets get to big numbers and they fight battles at them. 1950, 1900, 2050. If for a long time we're $25 increments, I used to read reports on it when gold was in the $1,200, $1,400 level and prove that to people. But as the price goes up, the movement and the reactions to them get wider. So it's probably $50 increments, and that's pretty much where you're stuck. I think you'll be fighting that battle for a little bit. We had a day to digest everything, and we saw today the Swiss National Bank, the Bank of England, even Peru's central bank, they all raised interest rates about as expected. Now, we have to think of what this means. In the U.S., the common thinking today is that the Fed is getting very close to where they're going to go into a pause mode. There's great concern about the banking community. It has not gone away. If you take a look at any of the bank indexes or you look at the individual stocks, most are under pressure, especially the ones that we keep hearing the names, First Republic, PacWest, I can go on and on. I have no idea why Charles Schwab has been down another 2.5% today. Their balance sheet is good, but anything to do with money, it's a problem right now in the marketplace. I'm going to go into the energy markets because I've got a real candle to burn. I am aggravated, but we'll talk about that when I get there. Bonds and notes. Well, I think that what you have to argue now is it's going to be very hard to get back up to those old tops in the 30-year bond. The 10-year will be difficult. The fund can do anything because it depends what the Fed wants to do. But the old days, I think, of getting back to 100 and the curve yield again, probably over. That was probably a blow-off top, as chartists call it. I could be wrong, but I don't think I am. And I am the guy that started saying last year in the summer, we were going to the 100 level, and we did. When we take a look at the weekly chart of closes, and the word is closes, the market came down, kissed the all-important 18-day average a while back, and it has been taking off ever since then. Now, if we're going to get distribution in price, you've got a spike, you've had a correction, you've come back up, you'll know that you start just whipsawing back in there, and I would expect that unless you're going to get another leg to the upside. So I'm on the lookout for now consolidation pattern to take place. We've come beautifully off the 1815 level, 1810 level. Remember when we had all the moving averages down there? I'll show them to you in a minute. And we've made a heck of a run. When we were over here, we were fighting with these averages for a long time, saying, is this going to be a zone? Actually, we were doing it, if you remember, in the April contract, not the June. And in the April contract, it was extremely pronounced, and the market has since then moved up. Why I'm saying I think consolidation's coming is because you've been running the Bollinger Band, and you've definitively moved to the right-hand side of it. After a big run, you typically get a consolidation. Do you have to? You don't have to do anything on charts, but the tea leaves, how do you like that term? That's generally what happens, unless you embed. Now, if you embed, it's different. We tonight have both numbers over 80. If I come back on the chart, you didn't have it the day before. You're nowhere near embedded. That's the important role. You're just in an overbought market that's fighting with that. It's had a lot of movement. The band, the daily ranges is the right word, not the band. The daily ranges are no longer this narrow. They've gotten too wide, and they will narrow in, and that's often accompanied by what I just said. When we look at the gold-silver ratio, you can see how it crashed in. Now, just days ago, I said if you got back through that number, and we were sort of like, let me come to that. I think I can get us there, maybe. Is it going to let me do it? I don't know. Yeah, there we go. I knew it'd be a delay. This is what we were fighting at. This is exactly it. And we were here, and I said, okay, we got over, we got under, and now we're starting the fight. If you start taking out this low, you'd have lower highs and then a lower low in the chart. This is what the market was doing. And now I'm getting excited because unless you get back over that high, silver probably comes alive in a better manner than the gold market. And you can see what's happened. That's exactly the case as silver is latched on. And is it embedding? Both numbers were over 80. That's tonight. You can't count Friday's trade, so you got to go to Thursday. Both over 80. Both over 80 the day before. They weren't the day before that. So tomorrow's the all-important day. Does it embed? Where does it close in the range by the end of the day? If the market can pull back and still be embedded, you probably get some good buying against the 100-day averages. Traders try to say, oh, it's going to stay over that. It's always dangerous, the first test of a major moving average. You generally test it over and over. In the copper market, it's been up and away as the trade is looking at this market and counting on China to be much stronger. And that's what's moving that. But the bear move is over in this. So now the question is, does a bull move begin? It's too vertical for me. Where would you put a stop on it? But I understand as a chartist that that's what it's trying to do. In the platinum market, we refuse to get very much in the overbought territory. You knock on the door, but you don't get further along. You got a 72 reading and a 69, but you really don't pop up. Again, the first challenge is, first time if you're hitting a major moving average that you haven't done in a very long time. You did that in February. You took another almost month and a quarter before you got there. It's acting as resistance with the Bollinger Band. So it's hard to get me excited in an overbought market. In the palladium, while we've ended a downtrend, we haven't begun a new trend. We're just drifting against the 100-day average. And in the dollar, well, you don't stay under the Bollinger Band more than 5% of the time. I hope you understand that. If you don't, you want to. When you ride these Bollinger Bands, you hit them up here, you have to learn to work with them. If you don't know how to do that, let me take you here. Take a look at this. I created this ad. It's so simple. Our course teaches you how to work with Bollinger Bands. You get the charting software. You get the videos with it. You're going to get 2-week access to learn. I will walk you through it in both the futures markets and the ETF. You buy the course. You start it when you want, and I turn everything on for you like that. Pretty simple. How do you do it? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all 3 of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.